Good afternoon. So after that climate litigation panel, which was threatening to be, dry according to Bernie, but turned out to be an absolute humdinger, we've got to kind of bring the level up with innovation, which is always a very flashy and exciting topic. Joined on the panel, I've got Sophia Wang on the far side, who is the Chief Operating Officer of MCI, Mineral Carbonisation. Oh, I've forgotten the I, haven't I? International. Yes. Closest to me, Nathan Dunlop, who's the VP of Strategy from Tritium. And thank you. And Darren Miller, the CEO of Arena, which you'll be familiar with as the I suppose, a climate grant-making organisation early phase. Just to introduce you all a little bit earlier, Sophia, I was hoping you could just quickly tell me what's the product from MCI and where does it fit into the decarbonisation story?
Thank you so much for the opportunity to speak. So MCI, more broadly, we're a carbon technology platform that transforms industrial CO2 into building materials and other low carbon products for the circular economy. For the last 9 years, we've been developing the technology in commercial secrecy in Newcastle and have a world-leading pilot plant based there. We've got a team of 40 chemical engineers and geologists and we're all signed up to a mission of locking away 1 billion tonnes of CO2 permanently and safely by 2040. It's ambitious, yeah. Our process is natural, scalable, permanent and profitable, and part of the carbon capture and utilisation industry, which I can talk about later. The Earth, it naturally stores CO2 over millions of years through a process called weathering. We've just taken that process from millions of years into a matter of minutes in our pilot plant, and it's really working. We take industrial wastes like steel slags, incinerator bottom ash and nickel mine tailings, and we combine them with CO2 from the hard to abate sectors to create valuable carbonates and silicates. They're then turned into building materials. So it's extremely scalable. There are enough mineral feedstocks in the world to lock away all of the CO2 that we need to in the transition and also to achieve negative emissions. So it's not the feedstock that's the limiting factor there. We've got projects running every day with the largest companies in the world, and they're converting CO2 into cements, plasterboards, carpets, glass, paper, and even washing detergent. You'd be amazed what you can store CO2 into. And I've brought along a little building block here. Darren would be very familiar with it. So this is a building material that's been made using CO2 from Orica's ammonia factory in Newcastle. And it's a permanent way to store CO2. It can be sold for a profit, and it's 10,000 years of storage into this carbonate product. Chemically binding CO2 is really a nifty way of doing it. This block's been with me to Glasgow, to COP26, which is where MCI won the #1 clean tech at COP26 from a field of 2,700 companies. So, yeah. Thank you. It is really encouraging, and MCI's technology will be one of the 1,000 technologies that will be a key to empowering the hard-to-abate sectors to decarbonise. And so I can tell you a bit about our customers. Right now, our customers come from the upstream CO2 providers. Like I said, the hard-to-abate sectors like the steel, cement, chemicals, transition minerals industry, and downstream to the low-carbon embodied products in the construction industry, advanced manufacturing and home care products, as I mentioned. So we were founded 9 years ago. When the two co-founders founded MCI, I was lured out of a PhD at ANU in corporate social responsibility in order to help set up the company, and it was probably the best decision I've ever made. And we've grown from around $35 million worth of grant funding from the federal government, the New South Wales government and Orica, and have some key investors with Itochu Corporation coming in as a cornerstone investor last year. We also won a $14.6 million grant last year from the federal government to build we think, one of the first demonstrator plants of its kind in Newcastle. And that has shovels in the ground really shortly. So that's really exciting for us. And so, yeah, having Orica and Itochu as our key investors have been really good for us, because we've had been able to use Orica's chemical engineering team to second into our project when we were first starting out. And Itochu was helping us to expand to Japan and to get access to the Japanese steel and cement industry, which is really exciting. I'm almost done. So we plan to access capital markets soon for our growth, which is obviously very important for technologies like ours. And we apply a values lens to all of our customers, partners, and investors. So typically, they're impact funds, superannuation funds, sovereign wealth, and decarbonisation-focused funds. And MCI is on a race to net zero. We want to collaborate only with those who are also on that race. Companies playing climate delay cannot be encouraged, and we look at climate ambition, true action, and whether the board is incentivised towards the achievement of climate goals. And we're careful not to lend our social licence to operate to companies that are not on the race to net zero. So we haven't just developed a technology, but something that enables a new business model to build decarbonisation plants that allow ESG funding and long-term returns that can deliver climate and ESG targets. So it's a new carbon infrastructure asset. So what we need is climate ambition and capital for industries to capture their CO2 right now and stop CO2 going into the atmosphere right now and do something with it. And the world just needs to bring an appetite to match that. Thank you.
Wow. I just want to try and give people a little bit more sense of the stage that the company is at. You're earning revenue, operating profit, net profit, where are you at?
So we don't do any free work. So at the moment, we are working with global customers on validating the business model of taking their wastes and their CO2 and validating the different products that come out from the end of that process. But we're not breaking even yet.
Of course, yeah, it's an early stage company. Yeah. I want to come back to the capital raising in a bit. And Nathan, your organisation's a little bit further along, but I want to kind of introduce you as well a little bit more, with a little bit more texture. Again, what's the company, what's the product, where does it fit in the decarbonisation journey?
Sure, thank you so much for having us as well. Tritium is one of the world's largest providers of DC fast chargers. We're probably number 2 in the Western world now, outside of China. We're based in Brisbane, Australia, so this is a Brisbane company. I just flew down earlier today. We've deployed around 7,000 DC chargers now, and most of those are in our key markets. So we're an export business. The UK, the Nordics, Germany, all very strong on e-mobility. And then emerging, California has been strong for us traditionally, but now the US is a growth market for us because some really key initiatives from the Biden administration that's going to deploy a lot of money into the space. So I joined Tritium around 4.5 years ago, and we had just on about 100 people. We now have about 500 people, so it's grown exceptionally quickly. Most of those all of our engineering base is based in Brisbane, up in here in Australia, but we have Los Angeles as one of our sales hubs, and also kind of places where automakers can bring their vehicles for testing. Same thing in Amsterdam. And up until now, all of our manufacturing has been done here in Australia, but we are in the fit-out stage of our facility in just outside Nashville, Tennessee. So it's a really huge milestone for us that we're going to be establishing this facility. It's about a couple of months away, and we'll have around a 10,000 unit capacity initially per year in there, in just outside Nashville. So it's a huge expansion for Tritium. In terms of how we are as a company, so Tritium listed on the NASDAQ in February this year. We went through a SPAC process, bit over $1 billion valuation. And then up until then, we've kind of raised money through quite a few equity rounds and some debt as well.
Yeah, okay. And who are the customers for
So our largest customers at the moment are Shell and BP. They're kind of our key customers. Other than that, we're seeing kind of this convergence in e-mobility of lots of different industries trying to place their bets. So we do work with Enel, the big European utility companies, the big fuel providers like BP and Shell, and then you get some retailers as well and trying to kind of deploy at their physical locations as well. So, but our key lighthouse customers are BP and Shell.
I'm curious, what was the experience of going through a SPAC like?
It was very long for us, so yeah, I worked on that for quite a long time. But yeah, it was pretty interesting. Obviously, the market was very positive towards SPACs initially, and then kind of softened a little bit towards the end. But as a vehicle to get Tritium listed and get exposure to the US equity market, it was a great opportunity for us. And unfortunately, I didn't get to go up and ring the bell. We had my first child at that time, but yeah, the photos of everyone over there ringing the bell at the NASDAQ was just phenomenal. It was just such a huge achievement. Yeah.
So Darren, through habit, I'm probably going to refer to some of your work as investments, even though I know it's grant making. Let's call it deployment. Can you give me a sense of what the kind of archetypal deployment of capital from ARENA would have been, say, in 2017 versus 2022, and maybe we'll come later to the future. So how's it changed? What's the archetype then and now?
Is this on? Yeah. Yeah, look, 2017, I mean, I'll take you back 10 years maybe. Let's work in decades because this thing takes a while to solve. ARENA was established 10 years ago and we inherited a bunch of programs. I think 9 different federal government funded programs came together to form the foundation of ARENA, and the government had allocated effectively a budget of $3 billion over the 10-year period. It landed up being 2 in the end because things happened with various governments that shaved a bit off of that. But whereas we inherited some very large early programs, particularly the solar flagships programs were early, very large, very expensive solar farms in the beginning. One of the things ARENA did around 2017 was run a competitive grant program to try and commercialise the industry. We saw evidence overseas that solar in particular was coming down the cost curve, and it hadn't experienced that in Australia at the time. So order of magnitude, I think, to install a solar farm back in 2017 was about $2.50 per watt of installed capacity in the ground. We thought we'd have to allocate about $200 million over 2 rounds to get that to a commercial level in Australia. Turned out it was $92 million in 1 round, and we halved the cost of installing solar in Australia purely through coalescing the industry and bringing the interest from overseas in particular into Australia. From the very beginning, when it took 5 minutes to hammer in a stake, to half a minute through automation and just process improvements. So just having a weight of grant money there to try and get the industry over that inertial hump, and we did that through that program. And that's probably what ARENA's known. We did that in combination with the CFC, but it's what we're known for, that particular program. But that's an archetypal program around 2017. We do a range of things and have done a range of things since then. We have 600 projects we've funded, so it's very hard to say this is exactly what it's like. But all the way from very early stage R&D funding, where we're supporting technology coming out of a lab in a university with a researcher, to being 5% of the capital stack of a $600, $700 million capital program, like the GenX pumped hydro project in North Queensland or the Kwinana waste to energy plant in WA. Very big deployments, where we think that grant money is still needed because it's first of a kind. It hasn't really been done in Australia, and it ranges, from those $500,000 to the $50 million grants. But ARENA fills a very valuable role. We're the only granting agency that specialises in clean tech in Australia. Obviously, Commonwealth funded. The states are doing things as well, but we play a valuable role in working with the states and working very closely with the industry. We have a lot of people who come out of industry, out of consulting firms, accounting firms, McKinsey. We have that very commercial lens to what we do. So we're a great combination of commercial nous and public sector accountability and stakeholder management.
And I want to come back to where ARENA money kind of ends up in the capital stack and co-investment and all that. I'll come back to that market. But with a bit of forward spin, what are the kinds of things you're beginning to anticipate for what might the capital deployment look like in 2020, 2027?
Well, hopefully, just a heap of solar and wind supported by lithium-ion batteries to do that balancing, supported by great advancements in hydrogen, with industry coming along in the wake, because industry is going to take the longest, I think, to get there. The electricity system by 2027, I would say, should be ideally a majority solar and wind-driven electricity system in the main grid. And the challenge of storage will come into being right then. So what we're seeing now happen with the energy market is entirely for this moment, with the commodity prices being high. But if we don't get on top of the firming challenge, when we have more than 50% of our energy delivered by solar and wind, then we're going to have similar kinds of challenges in the future. So it's very important that we sort out the network and market rules to allow these firming capacity technologies to come in and provide that support. But the technology works, and we're very confident that it's investable. We have invested in 6 or 7 large-scale batteries, a very big pumped hydro facility. So that's the theme for 2027 and beyond. It's just as much solar and wind firmed up by this technology as we can get into the market.
And with your current investments at the moment, you kind of mentioned that there'll be some where ARENA's just part of the capital stack. Do you tend to find yourself co-investing with big institutional investors, leaving CEFC at the side because they're a special case?
Yeah, in those bigger projects, they are project financed, and we have specialists internally who manage that for us. And so the world of finance, like this audience is used to, is not foreign to us. We get deeply involved in structuring those larger deployments.
And so if there's institutional capital available for those kinds of investments, what role does ARENA's investment play? Are you the first loss, or are you the,
So yeah, it is a first loss position, and often if we think there's a great chance of commercial success, we try and structure a recoupment in. So it sort of looks a little bit like equity, but without the upside, if you like. And then the real thing that ARENA brings is the brand. So people get a lot of credibility from having ARENA in there. But most importantly for the taxpayer, it's about the knowledge we gain. So we push the project to publicise what they learn from that project so that others can observe and can learn from that, can visit the site. Papers get written, conferences, presentations at conferences. That's part of what we offer. And I think it's a very valuable part of what we do. It's not just about getting that project underway, it's about what can we do for the next project and for the wider society to learn from that.
Catalytic kind of, yeah. And Sophia, I want to come back to you. Can you give us a little bit of texture around what the first round of outside capital allowed MCI to do?
Yeah, so when you look at the growth of technologies, so our technology right now is at TRL 6, the technology readiness level 6 in a pilot phase, and we've been validating our technology at that stage. We have a demonstration plant on the way, that's TRL 7, and the next stage after that is what we really need to have capital to accelerate towards building an industrial plant, doing feed studies, assessing the opportunities around the world in different regions. So we're particularly focusing on the US, the EU and Asia. There's some really significant opportunities both in terms of mobilisation of decarbonisation and also really good policies coming out of those regions. So yeah, the capital will go towards accelerating those opportunities.
And you touched on something before, which was the idea that you need to have values alignment and purpose alignment with your investors. Can you talk more about that, and how do you go around establishing that? I know that some funds look at just intentionality and do I believe the founder, other organisations need to have much more rigorous approaches. What's your approach?
So, as I said, it's really important that you have really good alignment with your customers, because in order to accelerate to the pace of the opportunity and the challenge of decarbonisation, you really need to be all in. You can't just be growing at the speed that the market currently develops technology. There's a lot of really low risk tolerance when it comes to making final investment decisions around when you grow technologies. So we are really careful when we interview our customers and potential investors to make sure that they're really caring about the decarbonisation pathway. They're looking at how they're going to do it internally, and they're also willing to take patient investment and also take some more risks up front because the rewards are quite vast. Yeah.
So I want people in the room to kind of prepare to ask questions, but we're not quite there yet. And Nathan, I know that your involvement from institutional investors has been all from offshore. Can you talk us through the kind of characteristics that have been successful in you guys finding investors?
Yeah, sure. So
leaving aside the SPAC stuff.
Yeah, of course. So I'd re-emphasise though in the early days that the patient investment is exceptionally important. So Tritium was lucky enough, way before my time. So Tritium is over 20 years old now, but only in 2014 started to do electric vehicle fast charging. And at that time started to get some small business grants from people like the Queensland government, their small business fund, and then found patient venture capital in the form of Trevor St. Baker and Varley, the company here, I think based in Newcastle, that do things like ambulance, fire trucks, things like that. They were very visionary in terms of investing early in Tritium and giving the opportunity to build the business in a nascent market. I mean, electric vehicles were very, very scarce in Australia at that point. It was only more towards around 2018 in that we started to need far larger investment. This is when electric vehicles really, almost crossed the tipping point, especially overseas in the Nordics, where we had big customers starting to want bigger orders. We were looking for funding and really had to look overseas. So we did an equity raise around 2018, scoured around, only really found opportunity in the US. And the investor that came to the table was actually the world's largest provider of fuel pumps. So the things you find at your petrol station. So Gilbarco Veeder-Root were a key investor for Tritium at that time. And I guess the parallels to them were obvious. They were seeing the opportunity in front of them in the form of electric vehicles eating their lunch. So they wanted to get in early and start to collaborate with us, and that was a great opportunity. In terms of institutional investors, when we started to look for debt in around 2020, again, we looked in Australia, but the opportunity for kind of these credit markets for, I guess, uncertain revenues, the appetite really wasn't quite there in Australia. So eventually we did find opportunity. We worked with Commonwealth Bank on this to find opportunities in the United States. And we were able to raise around $50 million of debt with a health fund in the US called Cigna. And they were, again, very visionary and really wanting to help get exposure to the e-mobility trend. And yeah, we've been partnered with them since. So it's been a great relationship. But in terms of finding that in Australia, it seems to have been more difficult. And it's not clear to me why, but I think just it is somewhat annoying in the conversations that you have in Australia around e-mobility and the transition to electric vehicles, where all of our narrative up until really this recent election has been, will they, won't they, will they, won't they? Whereas when you talk to investors overseas, they're absolutely fully committed. And they understand that this transition is well underway and they want to get in front of it. So I think maybe that's partly the reasoning.
Interesting. Sophia, in our preparation call, I'm going to steal one of Darren's suggestions, which was, you look at what the opportunities are there, but also what are the barriers? And I guess I'm curious to see, to find out from your perspective, what else do you need to see the market investing in that will enable MCI to succeed, aside from investing in it and capitalising MCI?
Yeah. So as Mark Howden mentioned before, we've got a fair consensus in the scientific community around climate, the IPCC community, that negative emissions will be important in the future. But there's not quite enough companies in the world capturing their carbon emissions or having immediate plans to do that. And one of the key things that we always discuss is that capture, like every tonne of CO2 that goes into the atmosphere now is causing warming and is causing damage. So we should be diverting as many emissions now, not waiting for them to be emitted and then sucked back down using 10 to 15 times more energy. So there is a little bit of work that needs to be done there with companies providing the CO2, and also the emergence of CCUS hubs, which will provide a hub for different technologies to emerge that transform CO2 into different materials in the circular carbon economy. So it's not just about CCS, but about a whole other new industry that could emerge in Australia in particular, where we have all of these capabilities in the just transition that will become available. So the Australian government earlier this year in March, they started to create a CCU ERF methodology, where we've been working with them to validate that we can claim carbon credits or ACCUs from our process and other processes similar to MCIs. And that validation from an Australian level will be a really big motivator for us to validate on the international market that what we're doing is legit, it does what it says it does, and it can be traded as well. So although we're not a carbon credits, we're not going after a carbon credits trading business model per se, it does add value to what we're doing, and having that will really be helpful.
Yep. I've got one last question, which is a little bit to the side, but Darren, it would be kind of remiss of me with a new government in place who's made some very big climate statements. I think there'll be a lot of interest for people to understand whether ARENA's, presumably wanting to put its foot on some of that capital that will flow out of those commitments and be part of deploying it. Where's the foot? Is it kind of here, or have you put your foot on it? Where's the conversation with the new government at?
Well, it's not lost on anyone that the new government's got a challenge on their hand right out of the gate. So I think their immediate challenge is just giving security to everybody that the energy system is under control, and we're not going to suffer physical outages, even though the market is in trouble. What I would say is that, and maybe just reflecting on the conversation we had before, is that we have a big challenge that we've got so much to do, and not enough people who are trained up to do the job. And that's not just engineers, it's finance people like yourselves and the investment community and all sorts of support people. We really have to reorientate our economy behind this challenge. It's a multi-decadal challenge. And we're dealing with extreme short-term challenges around supply chains, inflation, very tight labour market. So I don't have my hand out like I did 2 years ago when ARENA's funding was ending, and we really needed to convince the government that we had a role to play, and we did that successfully and have got refunded. So we have $2 billion available for the next decade. We've got plenty to do, and the government, I'm sure at some point, will turn to us and ask us to help deliver on their policy platform that they took to the election, which is a very ambitious policy platform. It's got a lot in it. You add up all the grants and the capital, and it's sort of $35 to $40 billion of commitment to climate change mitigation. And we'll do our job when we're asked to help deliver that. So,
what do you expect the first conversation to be when they do turn to you?
Well, they've already indicated they want to increase their electric vehicle policy, which under the old government was the Future Fuels Fund. The new government's got a Driving the Nation fund, and they've added $250 million of grant money to that, and they've told us we'll be delivering that. That was public. And there's a number of other programs in there that I think we can help with.
Thanks for indulging me to a point.
Would I be able to add something there as well? I'm sure Tritium's I'm sure you've got some stories to share, but having good policy certainty coming from the government really helps us to attract investment from overseas and helps us to develop technologies in Australia. It helps us to avoid being lured overseas and becoming a technology that Australia then needs to import at the end of the day. So policy certainty and consistency are the two things that we really need to drive home We have, it looks like some really good policies coming out of the new government. I'm really looking forward to seeing what that means for CCU. I'm not clear on that yet. But also the differences in the different state governments. It would be really nice to have a little bit of consistency and leadership going on across the different jurisdictions.
All right. I'll turn to the room, and once again, if you've got a question, hand up very high so the roving microphones can find you. Lights are quite high. There's Julian down the front has a question. And right here. Where was the one?
Gillian Reid from Mercer. I couldn't help but ask a question. So great to see the circular economy being talked about so much. Thank you, Sophia. I'm wondering how, in your interactions with investors, and you're now thinking, moving into private equity land, do you think investors, or how do we better make these connections between us investing in the solutions in a private equity space or new listing space, through how are we actually going to use that? So I'm thinking about how, for built environment materials, how are we then making that connection to other parts of the portfolio? Are we doing it, or how can we better do it?
That's a great question. I'm learning a little bit more every day, because it's, we were having a conversation before about how quite often investors and customers have these dual or multiple competing challenges that they're looking to solve. And if you have if you're creating a carbon asset and remediating CO2, but also creating a low carbon material that could be used, it's really hard to communicate the number of different bottom lines that your product creates. And I find that the maturity of the conversation is getting better, but maybe that's up to us to be able to communicate the value proposition. And stay tuned, because like I said, we're just learning as we're going at the moment. And yeah, it's good.
Can you hear me? Oh. Another question for Sophia. It's a technical one, I guess. I'm from ACCR. We look at a lot of companies and their claims around CCS, CCUS, yep. And a key concern for us is around the permanence of storage. Yep. You mentioned that the building block you have there is 10,000 yep. years of storage, is that correct?
That's right.
You also mentioned a series of other products. One was washing detergent, I thought, yep. I heard. I'm assuming that's not 10,000 years of storage?
So when you bind CO2 into a carbonate, it is permanently stored. I say 10,000 years because we can't really say longer than
forever.
That. We can't say forever, but it's basically permanently stored. And we're working with the large home care products manufacturer on the validation of that. But when it gets dissolved into water, it's still chemically bound as a carbonate. So yeah, that's something that the ERF methodology will be able to help to validate for us. But I think even permanence in the existing methodologies only doesn't go up to permanent. It's still 25 years, and so
you're streets ahead.
So we're looking at in the international markets things called sink credits and other more permanent ways to validate high quality carbon offsets, so that we can differentiate what we're doing versus, say, people that are turning CO2 into fuels and other more less permanent but circular opportunities. Yeah.
Can I be greedy and ask one more thing?
Yeah, of course, yes.
Just your comments about selection of clients as well, and you don't have to answer this if you're not comfortable, but am I interpreting you correctly that you're not willing to lend your social licence to oil and gas?
So we've been obviously approached by a number of oil and gas customers looking at what future solutions may be. And if you look at if you consider the different companies and industries that are going to be crucial to a net zero future, there will be some oil and gas players who will need to transform their business into enabling a net zero future. So what we've been very careful to do is talk to and understand the future plans of those different companies, and only work with those that we think will be players in the transition and a net zero future. And yeah, so that's the lens that we've been applying.
Thank you.
Yeah.
Be good to talk more about that.
Yeah, I'd love to talk to you more. Yeah.
I might jump in and ask a question that's keeping in my back pocket for Darren. So you've been deploying capital, making grants into technologies and, if you like, systemic foundations that we hope will have their kind of greatest impact in 7, 10, 15 years. And you've built up a lot of capability in the organisation to do so. If there are institutional investors who want to kind of join you on that journey and kind of expose themselves to the kind of upside, but also the uncertainty, what kind of capabilities are they going to need to put into place to allow them to do it well?
Well, I mean, we operate at the project level, so I think it would have to be attached to a live or potentially live project that needed then grant support from the Commonwealth or from states and the Commonwealth. And we have, I think it's a matter of also a bit of practice. You've got to get over the hump of being able to deal with a new organisation, new sets of guidelines. You've got to dedicate some time and resource to trying to understand how to interact, not just with us, but with anything that you approach that's new. And what I find is that institutions who've done that once know how to do it again. So we often have second, third, fourth time applicants. I won't name check any particular banks or institutions, but they're those who know and have dealt with ARENA before and are get used to working with us. And but ultimately it needs a live project. It can't just be too intangible for us. We actually want to work on projects in that TRL 4 to 10, 9, 10 spectrum. And so, and then we've got our investment themes as well. So we're not just open for business for anything. We've been very particular about what areas we want to focus on, because where we think we can have the biggest impact with our style of funding. And so it's, incumbent on somebody looking at that to sort of investigate what are we interested in and what kind of live projects might be available. But again, it could be at a very early stage, right? So it could be something that an institution would not normally do, but we can fill the funding gap to make that, to reach a hurdle rate that is acceptable for the investor. And then ideally, the next project or the one after that would be less of an ARENA grant and then ultimately commercialised. We're looking for a pathway where we're not needed anymore. That's what success looks like for ARENA. So institutions should be encouraged to go earlier, knowing that ARENA might be there to help with that funding gap.
Yeah, interesting. Well, please join me in thanking the panel.